Hello, and thank you for watching this short video and taking the time to learn a little bit more about myself and my company, and I'm excited to share with you what we're doing. But first, who is Jessica Burcher? I am the founder and CEO of Strategy in Motion, and I have been an active real estate investor since 2009. I'm a former realtor, and I hold a Bachelor of Arts in Music from Truman State University. And by day, I'm a marketing and production director for a group of music publishers. I'm a proud wife and mother of a crazy toddler, and I'm also an avid music fan and a happy hour connoisseur. A little bit about Strategy in Motion. We are a St. Louis, Missouri-based real estate investing group with the sole focus of buying and selling non-performing notes. We deal directly with banks and hedge funds to purchase assets. We buy primarily for our own portfolio, and whenever possible, we work with the current homeowners to help them get back on their feet and to strengthen the communities they live in by keeping more homes owner-occupied. Our main deal focus. Our main focus as a company, as I mentioned before, is buying distressed debt from banks at big discounts. And our goal is when we buy this debt, we become the bank. We have all the same rights that the bank does in foreclosing or in working it out with the homeowners. We're buying primarily in the states of Missouri, Kansas, Indiana, Tennessee, Ohio, Michigan, Florida, North and South Carolina, and Texas, and we try to avoid states with long foreclosure markets. We love assets on single-family homes that are valued between $50,000 and $250,000, and we're usually not going above that because we like to stay in that beginner buyer market for the most part. So that may be just a doghouse in California, but it could be a really nice property in other parts of the country like Missouri or Indiana. And then on the commercial side, we are looking at notes on properties that are worth at least $250,000 up to about $1 million in value. We prefer mortgages that are underwater, owner-occupied assets with payment history. If we can buy an asset with someone living in it, it is usually in better condition. And if they've made some sort of payment attempt or have some sort of payment history in the last 12 months, it is usually a good sign that they can get back on track. And we see about 50% of occupied assets with a payment history that we can either do a loan modification or a trial payment plan and keep the borrowers in their homes. Now, when we are buying notes, it doesn't always work to get them reperforming. We'll often offer up cash for keys, usually for what it costs us to foreclose. Our goal is to try and take the asset back as fast as possible if the borrower cannot make payments or doesn't want to work it out. So that happens about a quarter of the time. And unfortunately, we do end up foreclosing on occasion. Foreclosure is just going to happen in this business, but we try to maintain a 25% or less foreclosure ratio. If we do have to take the asset back, we try to price that asset to sell. We may do some slight rehab work like landscaping or paint, but we try to avoid heavy rehabs. And often it makes more sense for us to move the asset, get the money back in, than double down and do it again and again. So I will also tell you what we are not. We are not a wholesaler. We're not just putting stuff under contract and flipping it off for a straight fee. We're not a fix and flipper, which doesn't mean we don't have a rehab from time to time, but that is not our primary goal. We are not a landlord. I do not want to deal with toilets, tenants, and trash outs. And we are not a joker broker. We're not just taking stuff that we see online and getting from other people and spamming it out across the internet. What we are is first and foremost always buying for our own portfolio. We are turning problem properties into profitable solutions. And there's a lot of distressed borrowers out there. We can pick up notes at a price that makes sense and can really create not only a win-win for us and the borrowers, but also win for the banks and the hedge funds that have these non-performing investments on their books. And it's also a win for our investors. Now that you've heard a little bit about me, I also work with an amazing group of vendors that help me with my portfolio, and I rely a lot on our vendors and our extended team of professionals. And these are just a few of the professionals that we work with. At the top is Madison Management. They are our loan servicer. They are the ones that are sending out statements, reaching out to borrowers and collecting payments, and making sure that we are Dodd-Frank and CFPB compliant. So we are not violating laws in the debt collection side of the business, and they are keeping excellent borrower documentation for us. Next, we work with Singer Law Group. If we've got borrowers that are difficult to work with or being more aggressive and not wanting to pay, we can send the case to Singer. And our number one goal is to always try to work with the homeowner and get them back on their feet, but unfortunately sometimes that is just not possible. We also work with Pro Title USA to do title reports, title updates, to see what kind of things are hanging around these assets as we're getting ready to buy them. We work with Ross Diversified Insurance. We do put insurance on every one of our assets. They work throughout the country, and it's nice to have a one-stop shop. They are very familiar with the note business and insuring of distressed notes. We also work with Laughlin Associates for a lot of our asset protection and entity structuring. And we use crowdfundinglawyers.net. Anytime we have a new private lender, they draw up the paperwork and set up the escrow accounts and make sure everything is above board and legal. I do always recommend that our private investors also have their own lawyers review the documentation just so everything is 100% clear and above board. But we could not do what we do on a continued basis without our team of extended professionals. And of course, we've got realtors and vendors across the country in different markets and different law firms that we use to foreclose, or different realtor teams that are helping us not only on the valuation side of when we're looking at assets, but also on the liquidation side when we take an asset back and look to sell it as well. So we rely very heavily on our team. So just to give you a few examples of deals that we do, this is an asset in Fort Worth, Texas. The purchase price was roughly at 40% of the unpaid balance. It was well below the market value, and we wish every borrower was like this. On the first call and the first letter out, they responded and started reperforming on time, and they have been performing on time for 6 months straight. We expect to see another 6 months of performance before we look at possibly selling that asset off, somewhere between 80 and 85% of value. Like I said, purchase price was below 50%, so it's going to be a good return. Not only on the cash flow for us, if we choose to keep it, but also if we sell it off to a fund or an investor looking for performance, it's still going to be a very good return. And our funding partner received a great return on their investment, so it is a win-win across the board. I mentioned sometimes that we get assets back, and this was an asset we thought was going to be a reperforming asset. Everything we looked at in the collateral files showed that it was occupied. Online due diligence showed that it was in clean condition, but in reality, the borrower was trying to rent the property out literally 3 months before we came across the asset. So we bought this asset at $44,000. It was valued around $100,000 to $110,000. We bought the asset, got the collateral file from the bank. We opened it up, and there was a signed deed in lieu of foreclosure, literally right on top of the file. So lucky for us, the hedge fund didn't do a lot of work on the collateral files, and we did. We filed the deed in lieu after the assignment was recorded, which transferred the ownership to us. The property needed very little work, a little bit of landscaping. We were able to get almost a full price offer at $100,000 within 60 days and get the property sold. So that was a great win-win across the board. Here's a recent pool of assets we are currently gathering funding for. This is a pool of performing and sub-performing notes located in Jackson, Mississippi, Detroit, Michigan, and 3 in Cleveland, Ohio. Total property value on these is conservatively $200,000. And we're able to get the pool under contract at a substantial discount and looking to fund the entire deal with just $70,000. Now you might be looking at some of these homes and say they look a little run down or junky, but they are all owner-occupied assets with homeowners paying monthly or at least making partial payments, making this a win to get a great return on a passive income. So 6 important things about our buying process. Our number one goal is to rehab the borrower and not the house. We prefer owner-occupied assets with some payment history, so we can try and work with the borrower to get them back on track. We only buy first liens. We are not buying junior liens, seconds, or lines of credit. We want to be in control of the asset and to be in that first lien position. So the only thing that could technically wipe us out would be taxes, but we always verify that there are no tax liens during our due diligence process. We are only purchasing below market values. We're generally looking at 70% of the current market value or less. And we rely a lot on our vendors. They are always reviewing files, pulling titles. We have a very clear due diligence system that we go through before we purchase an asset. And if an asset does not match up with our requirements, we will cancel our offer and move on. We've got a very clear and specific list that we go through, and there are a lot of moving parts that we work with our vendors to help make that process go through smoothly. One thing to keep in mind also is that we are not the actual people reaching out to borrowers. I am not the person out knocking on doors or making phone calls if borrowers are not paying on time. We rely very heavily on our loan servicing Madison management team, and as well as Singer Law Group and the different law offices across the country that handle the servicing as well as the borrower outreach. And 6, we do place insurance on all assets, so if, God forbid, something happens, we've got Ross covering our assets, literally. And if the borrower shows that they have insurance, great, we can remove it, but most of the time we will be putting force-placed insurance on these assets. So what are we looking for and why are you watching? So we are looking for potential funding partners. We're always looking to raise more capital so we can close on more deals. And we deal with people who have cash, savings, 401k, and we also do a lot with self-directed IRA account holders. We are looking for real estate investors looking for an above average return. So if you are a tired landlord who doesn't want to deal with toilets, tenants, and trash outs anymore, or if you are an REO investor that can't find deals below 90 or 95 cents on the dollar and you're tired of overbidding at the foreclosure auctions. We also work with a lot of fix and flippers who are tired of flipping. We're looking for people who want to put their CDs or certificates of disappointment and their IRAs to work. Mostly people that really want, like I said, to see an above average return on their money. So we'd love to work with you, and I would love to talk with you to see if you're a fit for what we're doing and go from there. I appreciate you spending a few minutes of your day watching this video, and I'd love to continue the conversation and discuss your goals and expectations and what you're looking for in your investments. Not everyone is a fit for what we do, and if that's the case, I'm always happy to try and connect you with someone that might be a better fit for your expectations. But if you are fit, I'd be glad to discuss some available opportunities with you. I encourage you to book a quick call or a Zoom meeting with me, and you can book directly from the link talkwithjessica.com, and you'll be able to pick a time that works for your schedule and mine. And we can spend some time then discussing this more in depth, and I'd be glad to answer any questions you might have. Also, you're always welcome to drop me an email at jburcher@inmotionfunding.com, or you could call or text me at 314-312-3954. If you'd like a little more detailed information about how investing with your retirement funds work, you are welcome to visit our website at inmotionfunding.com and download our free PDF report, Investing with Your IRA. And you're always welcome to connect with us on LinkedIn, as well as Facebook and Instagram. I look forward to hopefully continuing our conversation and seeing if we can help each other create win-win scenarios. And thank you so much for your time, and I hope you have an amazing day.